Hi, and welcome back to the Business Career College video series. We're doing something a little bit different in this series of videos. I do have a couple of videos where I show Excel or Word or whatever the case is. In this video series, we're going to build out a multi-year cash flow statement using Excel. And this is something that really is most appropriate for somebody who is working through their capstone course. Others might find it useful, and we will have some continuing ed credits around this series of videos available as well, but it really is at its heart designed for capstone case study students. So we're going to work without a case study, though. We're going to work through sort of just notional figures, and I'm going to show you how I would build out step by step, in fairly long steps unfortunately, how I would build out a multi-year cash flow statement. So the first thing is it's a very, very long process, and we're going to break it down into as many incremental steps as we can. So I'm going to lay out my sheets. It's important to have some degree of organization to work from here. And different people will do this differently. I'm going to be very, very, very thorough in describing all my sheets. So I'm going to start off with a sheet where I'm going to have it for nothing but income. Okay? And you might do one for his income and one for her income. We'll do all sources of income together on the same sheet, assuming we're doing financial planning for a couple here, which we're going to do because that's going to more closely match most of the scenarios, certainly not all, but most of the scenarios you'll be dealing with, at least for the capstone course. And then we're going to obviously have expenses, and then I'm going to have a separate sheet for amounts saved. And then I'm going to list out the liabilities. And for now, I'm going to stop with a sheet that we'll refer to as data, or we might call this our assumptions. So the data sheet, we'll start here. We'll start populating the data sheet. This is the sheet that I'm going to use for all of my variables that might change in a given time or at a given time. So I might start here with, let's say, inflation. That's a good starting point. And I might need some assumptions around things like, how about a fixed income return and maybe an equity return. And we might have a real estate appreciation, that is the extent to which our real estate appreciates in value every year. So that's a good starting point. Maybe we're going to do retirement age here. So these are some of the assumptions that we're going to work with. The top four will all be interest rates. So I'm going to change that over to a percentage, and I'm going to give it the appropriate number of decimal places. I think right now that'll show up as 2 decimal places. So we'll use 2% inflation. Maybe we'll use, as per the Financial Planning Standards Council assumptions, maybe we'll use 2.9% for our fixed income return and 6.3% for our equity return. I don't really care what numbers we use. The point is just to have some numbers here. And real estate, let's say in the market we're in, that real estate happens to appreciate by 3% per year. We might use a housing price index for that. And retirement age, this is obviously not a percentage for now. Let's do 65. And I don't want that as a percentage. I just want that as a number. And I want it at 65. I could possibly include some decimals here. That might be appropriate if we're looking to be very precise in our CPP calculations, but really I probably don't need that. So now I've got a bunch of variables inputted here in my data spot. Income. So what I might do here is I might have let's say we've got our couple here. We've got Jeff's gross income. We'll have Jeff's deductions and Jeff's net income. And then we'll have Tina's gross income, Tina's deductions, and Tina's net income. And I might have to add some rows here later on, but we'll go with that for now. And we'll start off with monthly amounts. And then we'll do annual amounts. And I know these are all going to be dollar values, so we're going to turn these into currency. I always use currency for my dollar values rather than accounting. Accounting doesn't paste nicely if I'm moving things over into Word. So let's say that Jeff has a gross monthly income of $5,000 and Tina has a gross monthly income of, let's go with $5,400, so fairly close to one another. And Jeff is going to have some deductions from income, and I might need to spell these out in more detail. It's maybe appropriate to do so, but for now, just for the sake of showing how the sheet would be built, maybe Jeff has deductions from income, and we'll assume taxes are included in that amount. And in fact, if I'm going to do that kind of thing, this is where I might use a comment. Let's say that includes income taxes, and now if I have a question about it, I can see that income taxes are included. And again, do the same thing here. And now that I've actually started building, I should just take a moment here and save my document, especially when you're working with Excel. Frequent saving is so very important. And we're going to save this just as our Excel working document. Okay. And if I make a mistake or something somewhere along the way, I know that it's available, or computer crashes or whatever the case is. And especially when you're working with more complex things like this, these multi-stage processes, I have heard it happen from students where they say, I lost all my work because of whatever it happens to be. So we've got Jeff's deductions here, and Jeff's deductions are going to be, let's say, with taxes and so forth in it, we'll take $1,800 off, and for Tina, we'll take $2,000 off. And then we can arrive at net income. I'm going to start using some functions here, and I can take his gross minus his deductions and arrive at his net, and we can do the same thing down here. And then we can just do a annual amount for each of these figures and copy that down, and we can even do a sum here. And we simply want to take the two net amounts. Easy enough. So now we know we're doing a multi-year projection. Well, it's probably not going to help to just do 1 year's figures. So I have a couple different choices here. I might start building out a multi-year sheet, or I might build it out right here on this sheet. Okay, I'm going to do a separate multi-year sheet. So I've got some income, I've got my expenses that I'll work through in a moment, and then we're going to add another sheet in here. So it always adds it at the end. I'm just going to drag it over and rename it, and we'll start with our multi-year cash flow. So my multi-year cash flow, I know then that I'm going to have to work with a number of years here. And we might do it like this, year, and I might do Jeff's age and Tina's age so that I can track each of those. So the year 2016, Jeff is, we'll say Jeff is 31 and Tina is 30. And now I can do all of those numbers just like so. And I can drag that as far across as I need to. Probably a little bit long there at 107. But let's go to 100. Go till the youngest of them is 100. I don't know that that's necessarily the right age to use. Again, that would have to just depend on the assumptions that we're all comfortable with. That's what we're going to use here. And I always like to build in my freeze panes here. So I'm going to do a freeze panes at the top, and that's going to allow me to scroll down and still see the same information, or if I scroll across, I'll still see the proper marginal information that I need. And then we're going to look at the total net income, and I can draw that straight from my income back here. So it just links back to that amount of income, and I know I want that to be, as we've previously done, a dollar amount. I'm going to switch that over to currency, and we're going to knock our decimals down. And now I want that income to increase to keep pace with inflation. So I know I've got inflation over here at 2%, and I'm going to do this times 1 plus my rate of inflation. And I know I want to lock that in to that variable. I want to have that as an absolute reference. Otherwise, as I move to the right, the reference will move to the right. So hit enter. And of course, I want to have that in the same format. So I just use the format painter, copy that over. And now we can copy that all the way across. And we should see their incomes keeping pace with inflation all the way through. Okay. Does that make sense? We're happy with that? Perfect. So we're going to break there, and we'll come back and we'll deal with some expenses.